Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make a little money. My job is not just entertain, but education to teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Well, there goes the second quarter, and it was a real barn burner. Dow up 5%. That's to be rallying 10.5%. But the crazy NASDAQ jumping 17.75%. And not much of that was actually from the Magnificent Seven. Who the heck's doing this buying? Who is powering this market higher? It's not the hedge funds. They're waiting for the Fed to make a move. Not the institutions. They're worried about the tariffs. I think it's the young people. People who are part of the great wealth transfer, $100 trillion from the baby boomers to the alphabetiers, Z and X, and, of course, the millennials. I think they are the ones moving many stocks much higher. They have the money now, and they invest differently from the older folks. I say we have to salute this new generation of buyers, even if they're often way too exuberant in the purchase. Let me give you a metaphor. Take the stock of Robinhood. Boy, is that ever their stock, right? Skyrocketed more than $10 today to an all-time high. Why? Because it's using blockchain to allow its users to trade stocks in private companies. The move strikes most of the seasoned players in this market as absurd, maybe even boring. But this same development strikes younger and fresher-faced buyers as kind of a clever financial engineering that should be encouraged. They're not cynical about it. So what do? They go nuts buying the darn thing. No price is too high, and guess what? They'll be back tomorrow, too. This kind of behavior drives much of this market's recent action. It's a big reason why the Dow gained 276 points. S&P advanced 0.52%. The NASDAQ climbed 0.48%, finishing off this excellent comeback of a quarter. You know, Robinhood's not an anomaly. There's a whole host of stocks that are roaring on what can only be described as reevaluation of growth or animal spirits. We see Reddit, the online message board site, up more than 5% today. DoorDash up its usual 2%. Kava jumps 8% on nothing. We see Palantir, of course, the software company that brings costs down the moment you speak to them, is back on a roll after Friday's rare decline, levitating 4%. When Palantir was at 50, I said it was going to 100. When it hit 100, I said it's going to 200, sticking by my prediction. You know, I pass no judgment. Unlike most of the people around here, the older people I talk to, I pass no judgment about these people. You know why? Because they are buying very good companies. Unlike two stocks I'll talk about later, stay tuned. These are top-notch businesses that might have gigantic earnings power someday. You want to get in front of DoorDash, which may turn out to be an advertising powerhouse? You believe that Reddit stock is too expensive? Their ads represent incredible value, believe me. I can't believe how cheap they are. I think the stock's not getting enough credit. How do you know that Reddit's not the next Meta, which hit an all-time high today? Mark Zuckerberg has opened the wallet, spending on new talent in an accelerated way. You want to doubt him? Come on. Amazon's done the same thing in its years of growth. We'll be speaking to the CEO of Amazon, Andy Jassy, later in the show. Long story short, these younger investors reward bold behavior. They punish companies like Apple, which seem to have an aversion to being bold and instead like to buy back stock. That's an anathema to these younger buyers. To them, buying back stock is what you do when you run out of ideas. You know what else they don't care about? The Federal Reserve. These buyers aren't sitting there trying to guess the Fed's next move. They don't even know where the Fed is. They aren't paying attention to when a Philly Fed head says something cogent or a Cleveland Fed president snarls about tariffs. Now, here's the real question we all face, including those of us in the media. Are we right to wait with bated breath on every word from every Fed official? Is that the way to make us money? Is that the way I can help you? Or do the younger investors have a point? Look, there was a time when you had to watch the Fed like a hawk. When the hedge funds still ruled the roost, this laser focus on our central bank made sense. But the hedge funds aren't in charge anymore. Instead, we have what I call an idea market. When an idea resonates, when it seems right, the older cohort buys the stock too. No, it's not necessarily something exciting that just the younger investors embrace, but the younger investors are in there first. Any plausible idea that has promise, you know, flying cars, I don't care. Nuclear, I'm no longer fighting it. Right now, for example, we're seeing billions of dollars worth of orders for data centers to be built by Oracle. We already knew that Oracle was doing well, but it just put out a press release today saying it's doing even better. So what happens? The stock goes from 118 to 218 in a couple of months' time, and then it keeps going higher. What matters is that the fundamentals are terrific, and as long as they stay terrific, well, the younger people can keep buying the stock. Is this a confluence, though, of young meets old? Is there some sort of curious nexus where enthusiasm is on display everywhere? No, not really. See, I think it's simply a return to the old days, the early to mid-1990s, where if you had a company with something that captivated the crowd, like the flying car or a popular message board website, you can buy its stock and you can make a lot of money. Should you be able to do that, given that Harker retired from the Philly Fed today, or Goolsby's not certain about what's going to happen with the tariffs? In the 90s, we never even cared about this stuff. We don't know who these people were. We only knew about companies. We knew that if a stock had a good story, you bought it until you ran into sellers, and then you were done, and you sold too. Or you held it till kingdom come because it was such a great idea. In the old days, you could make great money with individual stocks. It was self-evident. We didn't think about single stock risk, what the hell that is. Some concept of the new guys. We cared about single stock rewards. We looked for stocks that could make us fortunes, the forerunners to NVIDIA and Netflix and Amazon and Alphabet. We made real money, and for the most part, we didn't care about the Fed because that didn't make us money. We cared about ideas. Of course, that era ended 25 years ago. People have forgotten what it was like. They weren't around when individual stocks got crushed and the averages and the stories dominated. But we're back, and it's big. The bottom line, we're now in a story-dominated market, even as the coverage is still all about the next quarter point from the Fed and what the hedge funds are doing about it. I say that's for the institutions trying to beat the indices by 1% or 2%. That's not worth it anymore. These days, they are about people trying to get rich with ideas. Who's right? Easy. Those who embrace stocks, not indices. The ones who find the best ideas and stick with them. That's who makes the most money. And that, in the end, is still what matters. Let's go to Jim in Georgia. Jim.
Hello, Jim. How are you doing?
I'm doing well. How about you?
Very good. And I just want to real quickly bring up my daughter, which we talked about before. She just had an MRI like 2 weeks ago, and it was perfectly clean. We're so excited after two.
Now we're talking. Now we're talking.
2 brain cancers. It's amazing.
Man, that reminds me of my friend John Gluck wrote a good book about cancer. I tell you, there are winning stories now. They were all losing stories at one point. Congratulations to you and to her. My fingers are crossed. Okay, let's keep going. What do we got?
Thank you. Okay, look, one more quickly thing. Why don't you give us some Mad Money Makes Big Money hats and T-shirts?
Let me work on that. I like swag. My daughter's a swag person. I'm going to have to check in with her. All right, come on, let's make some money together.
All right. I'm looking at private equity. I saw that BlackRock may be introducing some ETFs with private equity.
Yes.
But really what I'm interested in is Apollo.
I think Apollo's real good. It's real well run. Mark Rowan is very, very smart. I also like KKR. I think KKR is absolutely terrific, and I like Blackstone. Those are 3. I gave you 3 because you bring a lot to the table. I come right back and bring a lot to the table. How about your daughter, huh? Is that great news? That is just fabulous. All right, right now the Fed is on the back burner. We are in a stock picker's market that's being driven by ideas, and I'm going to help you find them. On Mad Money tonight, from AI to the state of the consumer, there's a lot to discuss with Amazon. We found that, didn't we? Don't miss my exclusive 2-part interview with CEO Andy Jassy. Then Celsius shares have been a roller coaster past year, but crawling back from its lows. How'd we get there? I'm tracking the action, sharing where I think it could be headed. It could be GameStop with earnings. And Circle has found a passionate investor base on Wall Street. I'm sharing why I think this one may be a little bit insane and maybe can't be justified. Hey, look, not everything's great. Some things are already played out. And I'm not the only one on the street thinking that. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.